Welcome to the Uncontested Investing Show, presented by REI Inc. magazine and sponsored by RCN Capital. Each week, we focus on bringing you candid convos from the best in the biz. Here's your host, Tim Harridge.
Welcome back to the Uncontested Investing Show. I'm Tim Harridge. Thank you for coming back. Today, I'm joined by a local legend here in Dallas, Casey Smith. Casey, how are you today?
That is quite the intro. I'm wonderful after that. Thank you.
Well, we try to keep it fun around here. Why don't you just take a minute and just tell the audience a little bit about yourself?
All right. Well, I've actually been in Dallas for about 7 years now. I've been in Texas for about 10. I actually have only been in real estate for about 5 years. However, I have a very interesting background as a media analyst for a company out of Zurich. So I've actually been, that's a whole nother life. But I really do feel like I was like groomed to be in real estate by my background. So after getting a master's in kind of politics and media studies and things like that, I went into media analyst, eventually to sales, and kind of tumbled into real estate. So I'm a licensed realtor here in Dallas. So I only work with investors, really only people doing fix and flip or wholesales, so I don't deal with a lot of buyers. So I've got that on the side. I own a company that does transaction coordinator services for investment companies nationwide. So most of the people probably watching this, we basically just handle the paperwork and the timelines and communication. So we do that, and I think that covers my bases. I also do invest in properties myself.
Well, like I said, you're a local legend. So Casey, I start every week off with what we call the bottom line up front, the bluff. When I was in the Marine Corps, they always said never bury the lead. When you go in to brief the general, make sure that he knows the most important thing up front in case he has to get up and leave, or you take mortar fire or something like that. So bottom line up front, kind of the most important thing you see happening in the market today, things that you think investors should be doing and things you think they shouldn't be doing. Clear?
As day.
All right, on the bluff, go.
All right, so bottom line is that a lot of things depend on a lot of things. So I kind of ascribe to Ray Dalio's philosophy that if you're worried, you have nothing to worry about. And if you aren't worried, you probably have something to worry about. And what I mean by that is I really think that you should be focusing on reality. What is happening in real time, because at the end of the day, you really can't predict a lot. I really think it's important that you focus and treat investment decisions like you would a business. Even in the stocks, you're really just purchasing tiny pieces of businesses. So if you don't have the mindset to understand the systems, the processes, the supply and the demand for whatever that business is, then probably shouldn't be investing in that. Most of the people that are probably watching this are either starting their own business, running their own business, or looking to invest. And obviously, those can be combined things. But I think that you can only really deal with identifying what's important to your business, and second, what you can know. So if you're making predictions or investments or decisions based on fear or a prediction of what's going to happen, you might find yourself in a little bit of trouble. I would highly just recommend that you do that SWOT analysis that you would do on your own operation in any investment decision that you make. Lastly, I would say really, really focus on understanding that this is a long play. Investing in and of itself, money is typically made on day one, which means that you're really not looking for your cash returns up to 5, 10, 15 years over that. So if you start looking at your numbers that way, you're not going to be as panicked about what's happening in the first 5. So I think just keeping that overall perspective, really looking at the microeconomics and things that are happening within your sphere, you will be able to identify certain patterns and pivot and move and be agile. So bottom line is, I think that you need to just position yourself to be agile, to be able to pivot when things shift and change, and not really be fearful. You just got to buy right, pay attention, work in reality, and treat your investments like a business.
Okay, so let me unpack that. Treat your business like a business. Are you telling me there's people out there that don't treat their business like the business?
Well, I think it really depends on what stage of business you're in.
Right.
I've got mentors that have kind of helped me identify what stage I'm in and how to exit and enter the new one. So I think everyone kind of has to understand where they are. So I would say probably most of my clients with my transaction coordinating company are closing 5 to 10 deals, but we've got those guys doing the 1 to 4 that are in a different stage of business, right? So they're kind of in startup or perseverance phase, where they're just surviving, right? They're just moving and transacting and getting the money because they don't know what's going to shift. I think the companies that are in their viability stage are really slowing down slightly. Maybe they've got some freedom where they're not sitting in every seat and they can actually observe and watch what's happening. So I think that not everyone understands how to run their business or knows what to look at. Most of the mentorship that they're getting, in our sphere anyway, are from people in real estate, not necessarily people that have grown and successfully built or exited companies.
Yeah, and so much of our business or businesses they model after our own personalities, right? And so,
definitely.
So the ADD investor like myself is going to build an ADD business, and they're going to have ADD processes, and whereas the investor that may be super detail oriented may have a little bit more trouble pulling the trigger on things. I wanted to go all the way back to your intro, tumbled into real estate.
I almost felt like I was groomed into it, like unknowingly, but yeah, I tumbled into it. Was that the question?
Yeah, how?
So I'm kind of one of those people that I was always jealous of people that knew what they wanted to be when they grew up. And I realize now that I'm super grateful I never had that vision, because I always approached everything I did with an open mind and opportunity, right? If it was a field or something I loved, I would kind of understand the dynamics of it and be interested in it. So I went to school to get my master's after a long stint backpacking and living my best life in my 20s, actually during 2008, 2009, which I could talk about that too.
Good time to not be in business.
Yeah, like I was making 6 figures living in the Cayman Islands, tax-free. Like I was like in a different world at the time. So I never really experienced that.
Right.
But anyway, I ended up falling into a media analyst position out of grad school. Kind of got recruited out of a class for something, and I ended up working for this company and traveling all over the world and working with kind of some high profile people, World Economic Forum, all sorts of crazy things in my 20s. And so I got burned out pretty quickly with the idea of that corporate dream job, because I was exhausted. I mean, right. I was like losing hair. I ended up getting married, which didn't work out so much, but that was what brought me to Texas, and I slowed down because I wasn't able to travel the way that I did. Tried my hand in nonprofit, which the way they operate is not my cup of tea. I was told I made too much money raising money and to calm down. So that was an odd experience. I knew it wasn't for me. And then my partner at the time had got me into sales, and we finally kind of looked at the house and we're like, why don't we just sell the whole house? Because we were doing windows and siding.
Right.
I ended up being really good at it, and I didn't expect to be. And so, I got my license, and the rest is history. I kind of got interested in the investing and the creative side of it. And I had already been in people's homes all day, every day for a few years. So it kind of was a natural transition. And that would have been around 2017, 2018. And so I've been licensed since then, and tried my hand in some wholesaling, fix and flips, things like that. I used to door knock foreclosures prior to 2020. That was a fun start. I feel like I've earned my stripes a little bit.
Right.
And then, after that, 2020 hit, went through some personal changes and kind of found a little niche of a need for transaction coordinating, which I felt was kind of the lifeblood of the operation, and built an army of them because I couldn't find a good one.
Well, some of the best businesses are born out of our own internal needs. Mm-hmm. So we're about to take a break, and when we come back, I want to talk about niche businesses, transaction coordinating, being a realtor, being in sales, investing, rentals, being burnt out, what the heck a SWOT analysis is, and I love that you said the startup/perseverance mode. So we have got a lot to talk about. Stick around. We'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Welcome back to Uncontested Investing. I'm your host, Tim Herridge. I'm here with Casey Smith. Casey, wow, that was a fast 10 minutes. I want to start with a SWOT analysis because you said something interesting during the break. Walk us through kind of the importance of even a real estate company doing a SWOT analysis and maybe even grow on the whole treat a business like a business aspect.
Yeah, so a SWOT analysis simply is identify strengths, weaknesses, opportunities, and threats in your business and in your operation. That can be internal, it can be external factors, but at the end of the day, you should have a pulse on both of these things, right? A lot of times our heads are down, we're wearing all the hats, and we're in the weeds, and we're not able to really get on that hill like the general, right? Who's on that hill. You're going to have a lot of like history references from my education, but they're the ones that are truly watching and seeing everything in play. They know what is behind. They know what squads are behind. They know who's lacking resources. They know who's getting attacked. They know where people are moving because they've got that 10,000 foot view. So I always treat a SWOT analysis like that. And it's something that I don't think people do regularly enough. They typically will do it once a quarter. I mean, even that's good. Some really will do it once a year, right? So I actually do it weekly with my team. We've structured our meetings in a way where we're always identifying how many steps did we take towards our goals, what was our strength this week, what are some issues that we're having, things we're hearing that need to be addressed, feedback, what opportunities have come our way? Have we noticed a bottleneck in a process that we can improve upon that can actually help our efficiency and keep our costs down? Things like that. And then threats can be a variety of things. It could be someone on your team. Are you keeping them on because you just need someone to fill that seat, even though they aren't doing great? Are you, is inflation hitting? Is your cost to buy materials rising? These are all threats to your bottom line and your cash flow. So I think that if you can identify the core things that are important to your operation, and even if you don't know, track it, throw a bunch of stats down and track it and see where the correlations are, see what the patterns are if you don't know. But I think that that's generally what I like to do. Just to see, because my business is dependent on everyone else's businesses doing well. I'm a service company, right? And although it's not my main source of income, it is cash flow to me. That's how I look at that business. It's purely cash flow that I can make other investments with other money.
Well, and I tell people all the time, don't look at a business as a business. Look at it as, don't look at a business as a job or what it does. Realize that what it is, and what it is a business. It's an income stream, and I always say the business is not the dream; it's the vehicle. Right?
Absolutely.
I mean, it's what gets you, because no real estate investor ever was 18 years old and said, "Mom, I just really want to sit in a dirty house with some guy blowing smoke in my face. Right. That's what I want in the rest of my life.
Trying to convince him to give me his house."
Mom, I want to take phone calls from mean people at Saturday night at 8 o'clock when they check their mail.
Yeah.
Like nobody ever said that, right? Mm-mm. And so I think there's a challenge that even though we are in a service business, which was another business you were in, that is specialized, you can still run it like it's a normal business.
Yeah.
And I think I've proven that they can be saleable. I mean, I sold the REI Expo back in 2014, and it was the only expo in the business, and there was nothing before, but there was value there. It had recurring revenue. It had a large email list. It had a social following. Like there were valuation metrics around it. When we sold REI Choice Insurance, it was purely off the recurring revenue, the cash flow, like your transaction business. Mm-hmm. And what made that one, interestingly enough, more valuable was the fact that it did not require my involvement.
Yeah.
Right? It wasn't my job. It was just something I owned. Mm-hmm. So talk about structured meetings.
They are just that. They are structured. Really, It's an accountability. I think sometimes it's hard when you're the CEO or the owner, but you're also operating. Most of these guys are the ones closing their own deals as the owners, right? And yeah, you got to hustle. There's a period of time for that, but it should be with the goal of exiting. You didn't start that to be hustling like that every day. The amount of phone calls I get from my clients every day, they ask me, they're like, how are you not in operations anymore? Like, how did you do it? Because we did it in 2 years.
Right.
So what we do is, and this is truly with the guidance of mentorship. Like I've got mentors that have, built and sold multi-million-dollar companies. So they taught me day one to put structured meetings in place. And there's a bunch of different types you can do. We call these our L10s, kind of after traction, right? Where you're just identifying how close are we to our goals for the quarter? What are we hearing? What are the issues? What are our stats? Every single Friday. There's a lot of days we don't want to do it, but just going over those numbers, you're going to see if anything's shifting or turning red or not a pattern that you're used to seeing. And it allows you to pivot very quickly. So we do things like that. We also use structured meetings for processes, because that is like the worst job ever is putting processes in place, but they're needed. And everything that's successful is because it's been systemized or processed. You can really do that with anything. You just have to identify what the core predictable things are and what are the anomalies. Having 1 day a week to just be, hey, what's the process that feels the most chaotic? And let's just map it out. Like what are we doing and how should it be? Little things like that are going to get you to your goal way faster than just grinding and hustling and trying to outwork everybody, because it's just not sustainable.
I completely agree. I like to be the person in my companies that I'm the dumbest there is when it comes to when someone asks me for help on something. Like if you want help on a loan at RCN Capital, you don't want to talk to me, right? Because I'm just going to be like, I don't know. I mean, I got to go call somebody and figure that out, because that's just not what I do. If I want help if I need to know when my file with your transaction closing company is going to close, I probably don't call you, right?
But you can, because we've got systems and processes to look that up immediately.
But it's it's not the most efficient route.
Correct. Yeah, and it takes a lot of discipline for an owner to pass that. I think that's another side to the coin, is empowering your team to do the job. So when people ask me, even if I know the answer, I still say, hey, the best person to reach out to would be Anissa. And I train my team to do that. I train my clients to do that. Redirect them to the place, and that's your first thing to do. But everyone feels like they want to jump in and they think they're helping, but you are causing chaos. Like that was my biggest lesson of April last year, was how much chaos I caused when I genuinely thought it was the right thing to do, to jump in, take over, and handle it. Not the best thing to do.
I was telling a loan officer 2 weeks ago, we're at a trade show, and the loan officer's like, I got to go handle this. They need the insurance binder and the close date or something. And I said, well, wait a second. You're the originator. Shouldn't the processor have put it in our proprietary LOL, loan origination system? Well, yeah. Well, who's asking for it? The closer. So, well, tell them to ask the processor. And he's like, well, but it needs to get done. And it's like, no, but you're creating a system to where there's no accountability, where there's no reason for someone to do their job ever if you're going to do it for them.
I mean, think about it. It's human nature. What's that famous murder that happened that was like on this street? I think it was like, it's this famous thing that happened in the 50s, I think, where this woman was getting attacked in a neighborhood and everyone was just watching and like no one stepped in. It's human nature to do that. So when you see a bunch of people asking and there's a lot of hands in something, everyone's always going to assume someone else has the answer. Right. Or someone's going to hop in who is probably a go-getter, who's just like, don't think, do. And they're just going to be like, I don't care, I'm going to figure it out. And they're the ones waving the paper in the air, disrupting everybody. And it's unnecessary. It breaks process and systems. As an owner, I would look at that person and be like, where was the breakdown here? Like, does everyone not know their roles clearly? Do they not know their lanes clearly? Let's document it and make sure it's known.
So last night, an Airbnb tenant of ours contacted my wife and could not get in the front door. And this is after the electronic lock malfunctioned and they were using the little manual key. And my wife says, what do we do? You said, don't think, do. I'm the don't think, do guy. I'm like, I don't want to deal with this at 8:30. I pick up the phone, I Google emergency locksmith in San Antonio, dial, send, here's the address, go, hang up. And she's like, well, how much is that going to cost us? I don't know.
I would have done the same.
Well, here's the crazy thing. 10 minutes later, I go back to my phone, the guy writes back, Thanks, we already got in. So now I'm calling the locksmith. They're going to charge me a trip fee. No, he's going to go ahead. I'm going to have him go ahead and go fix it anyway. Fix the other lock. That way I don't have to deal with this. Well, I'm all in a hurry. I'm in the don't think, do stage. And I talk to text in the Airbnb app that I'm going to go ahead and let the locksmith come on and look at it because he's already going to charge me a trip fee. Somehow it got transcribed as a trip fee because of you. Yeah.
I'm sure the aftermath of this is fun.
Yeah.
That's a great example, though. It's chaos. So I think David Richter, a friend of mine, posted something.
Remote CFO, right?
Simple CFO,
yeah.
And he came out with Profit First for Real Estate Investors, great book. But he had posted something from a mastermind that was a quote that said, "If you're constantly putting out fires, you're the arsonist." Yeah. And it's my favorite quote.
Absolutely.
Because it's very profound. I sat on that quote for a while and told it to my team. If you're on fire and you feel chaotic, it's probably you causing the chaos. So let's take a minute and let's step back and let's figure out how to get you in a system and a process where you don't feel that way.
Well, it seems like systems and processes are your thing. We're going to take a break. We come back, we do the Money Minute and then rapid fire. All right? Stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-best.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm your host, Tim Herridge. I'm here with Casey Smith. Casey, my favorite part of every episode has ended up being the Money Minute. Imagine there's a young Casey out there, maybe burned out in the job and living in the islands, or a young entrepreneur or a business owner that's struggling, and they're only going to get 60 seconds of advice for the next 30 days. And that's this 60 seconds. I mean, after they listen, it's shut off. There's no more advice. So think of ways you could help someone, your wisdom you could impart. Are you ready?
I'm ready.
Let's go.
All right, my advice would be to invest in yourself for an hour every single day. And what I mean by that, it's not this whole, mindset might be part of it, but it's also educate yourself. Make yourself really valuable in this industry. Most of us haven't lived through an extensive crisis. We think back to 2008, but there's a lot more that happened beyond that. So at the end of the day, I think it's really important that you take an hour to learn, educate, figure out where you're going to put your own cash and work with what you have. Don't be listening to people that are a different level than you. So focus on that, the here and now, stay grounded in reality. And at the end of the day, it's your future. So no one's going to care about it as much as you.
Okay. You just said one of those things that I love the most that my wife says to me all the time. It's, you can't get there from here.
Yeah.
Right? And so often you see people make their decisions based off of like what the billionaire's doing.
Yeah.
Well, guess what? If you don't have $1 billion, you probably shouldn't do everything the billionaire does.
Correct.
Let him or her catch the falling knife. And then once you see it's not falling anymore, maybe then you grab the handle. Right?
Exactly. Baby steps.
It's like, it's just simple. But I'm going to just go through some rapid fire. Rocket
sounds way more fun. Let's do this.
It does. Common bottlenecks in the real estate investing ecosystem.
What are they?
Yeah.
Gosh, they're honestly everyone else. They're everyone else you can't control. I mean, they're your bottlenecks. If they don't have systems and processes, you can't control that and you're playing a waiting game. So I would say other people and understanding how they operate and what's important to them, understanding that will get past that bottleneck.
On your team, I've seen you hiring. I've seen you hiring more. I've seen you replacing. What are some of your just your personal processes and things you look for in filling out your team?
Yeah, so that's a really good question. I actually really, just because someone has experience in something doesn't mean they're going to be good. It doesn't mean that that's the right role for them. So what I really look at is understanding what they love and hate. I ask that question all the time. I also ask them what would make them quit within 6 months to make sure that I have like a good managing style for them and a culture. I say those two things, making sure they fit your culture, making sure that they really are in the right seat. I test everyone in predictive index as well. I have kind of an ideal profile based on experience. I've got 5 or 6 full-time TCs, about 5 or 6 virtual assistants, and the successful ones all have a similar pattern. So I kind of built out a target and I test them against that. And then I'm more able to kind of groom and guide them into the skill set I know is kind of like their core excellence, and they might not always know that. So that's how I kind of try to operate. It's not necessarily the experience, but the personality and what they want.
Virtual assistants seem to get a lot of buzz and noise these days. How do you find it is to manage VAs, and how are they different than in-person employees?
VAs need structure. People forget that. You want to hire a VA in your growing business and you haven't put systems and processes in place, they are going to have a hard time. So you really, depending on what stage you're in, and I'm big on that, is are you hiring the person that has the initiative to document for you as they're learning and growing and talking to you? Or are you hiring someone that needs them already established? And that again comes from how they operate best and where you are. So I think that understanding that aspect of it is probably going to make you the most successful in dealing with them. But I also find that a lot of them are coming from agencies that are trained to do things a very specific way. So a lot of them have cold calling experience or customer service experience, but the VAs, man, I've got some smart VAs. They probably know more about real estate than most of my clients because they read contracts all day, every day. They watch the flow and the operation and the timelines of things. So you'd be surprised at what they can do. You just got to make sure you've got structure in place or hire someone that can put it in place for you.
Startup perseverance stage. Talk about, I know it may not be something you have documented, but what are the different stages that you kind of see investors in?
Yeah, so this is kind of off of like Eddie Wilson and Gary Harper's Empire operating system, right? They break it down into these core places. And a lot of people are really stuck in perseverance or viability stage. Now, perseverance is like, everyone's like, hustle hard. Yeah, there's a time for that. But hustle not in vain to get to viability, where now you've got your systems and processes documented. You've got reserves to pay your team for a few months. And again, what got you there is not going to get you to growth. And I think a lot of people skip viability. They go from perseverance hustle mode because they got a couple of really great deals and they go to growth and they immediately start expanding. But they haven't found the efficiencies in their processes. So they're just throwing money at things. And then when there's a shift and bad habits are formed in good times, then now they all of a sudden aren't getting that cash flow coming out. So I think that it's important to understand how to get there. And a lot of people stay in viability. Now you've got your freedom that everyone talks about. They're like, I can go on vacation. I've got people operating my team. I'm in a viability stage. People that go to the growth, they say typically has to have a bigger purpose, because now you're reinvesting your profitability back into your company to grow on a much grander scale. And that's typically tied to a bigger vision or purpose, because now you're probably back in the seat again, re-navigating or changing your direction or growing it to a scale that it might partner with other businesses. I mean, then there's, of course, succession. How are you exiting? Are you selling it? And so there's other stages that no one really talks about. They teach you how to get there and start with no money, but they're not teaching you how to grow and stay in the inevitable highs and lows. If you're a business owner and you don't expect good times and bad times, you should get out, because that's literally the essence of it. So you've got to figure out how to see them, how to ride them, and how to pivot in them. And that is there's more to it than just throwing your cash at something and getting money back.
Bad habits are formed in good times. Quickly, some bad habits you see in the real estate investor, kind of small to mid-sized business realm.
Truthfully, not asking the right questions. to their sellers and whatnot. So contracting back deals, hanging on to them too long, not cutting the rope and walking away and going after the deals that make more sense because they're desperate, right? It's all they have on their plate. So I think that that's probably a big one is they're not asking the right questions. They might not know what questions to ask. So that's a huge thing in our company. Have you asked the magic question to figure out what we need to get done?
What's the magic question?
It depends on the situation.
Oh, then that's not magic.
That's like the answer to everything in real estate. It depends.
I was like, oh, the magic question.
It all depends, right? If you're trying to get an insurance, the underwriters at an insurance company or even a lender to take a risk on the deal and you're challenging something that they want done or clear, you got to ask the right question. You got to ask them, well, what are you willing to accept that you would issue a title policy on this situation? I mean, you got to ask the right question.
What makes someone a good customer of yours?
Ooh, somebody who's open-minded to changing their process, because we come in and most people that come to me don't have one established, or they do, they just haven't done it right because they're not really the right brain to be putting that process in place. So now what was the question again? I like backtrack.
What makes, I don't remember if I said what makes a good customer or a bad customer.
Yeah, a good customer. So a good customer to me.
Open-minded.
Open-minded,
yeah,
so we answered it. So basically anyone who allows us to give our expertise off working and servicing over 70 companies, and we see the good habits and the bad habits. So how quickly they adjust and listen and implement and enforce and lead their team. Number one thing I see are these leaders are so anxious to go on vacation and not be in the day-to-day that they forget to lead their team to enforce the process.
Delegation by abdication.
I mean, that's what they do.
I've been so guilty of it so many times.
Yeah.
3 bad habits.
3 bad habits of
Tell me.
Of the investors?
Yeah.
I feel all stressed out now.
I'm trying to be in a hurry. You get too much. Come on.
They do not ask enough questions to sellers. They are eager to get it done and they don't want to burden sellers with all the questions. You're not burdening a seller. You are helping them get through one of the biggest decisions of their lives. Ask all the questions. So that's a really bad habit we see. The biggest one I would say is the leadership, lack of it. I'm so busy. I'm at a mastermind. Get out of your mastermind and pick up the phone, because if I'm calling you, there's a problem. And it's your deal. It's your money. Like, you should care about what happens to that transaction. The third would be thinking that their money is made the day they contract it. Their money is not made that day. It is made the day it closes. And so your cash conversion cycle is going to shift. And the day you sign it to the day you get your money, a lot of people don't know what that number is. They don't know what their cash conversion is. And so they get really upset and anxious and calling, why isn't this closing? Why isn't this closing? Well, sir, because the owner died last night and this is just an inevitable part of the situation. Right. So they don't account for those pitfalls because they don't understand where those are in the process.
That's common in all areas of real estate, that people cash that check the minute they see the gross number. And,
I'm guilty of it.
We all have been.
I lost 70 grand in 1 week and I cried myself to sleep.
But you didn't lose it because you never had it.
I never had it. I lost it in my brain. That actually that was my number one aha moment where I shifted and pivoted strategies. I started building Atlas after that. That's
good stuff. Casey, we're out of time. Any parting thoughts or shots?
I feel like I have said a lot. I'm gonna part with this. I'm young. I'm just under 40. I haven't lived through a very big recession doing this. So for anyone out there who is around my age and experience, pay attention and do the research and learn beyond your lifetime. Go look back to the 30s. We're actually in a cycle more like the 80s, mid 70s to 80s, and how it happened and inflation inverted. It's not 2008, 2009. So everyone's doomsday. And also, if you hear anybody talking, I'm predicting it, I'm calling it, just unfollow them, because economists can't even predict this. The Ray Dalios and the Charlie Mungers and the Warren Buffetts of the world can't predict it, and they know it. All they're doing is putting certain things in place to watch the patterns. So that would be my advice to you if you're getting into it, and be conservative.
All right, so you are a realtor and you are in Texas?
I'm a realtor in Texas. I mostly Dallas, and I have access to Houston and Austin.
And you are a transaction coordinator in?
We do nationwide. So our company handles any kind of contracts or clients nationwide. So if
all 50 states?
All 50 states.
Alaska even?
Well, I'll do a lot. I think I've done one in Alaska, actually.
And if somebody is interested in learning more about your transaction services, how would they get a hold of you?
Yeah, best way would be to go through atlastcservices.com. There's a little link to submit an application, and that will trigger my team to reach out and schedule a call. That's the best way. You can friend me on Facebook as well. I think it's Casey Atlas or Casey Smith Atlas. I don't really know. You'll find me. That would be the best way as well.
Very, very good. Well, thank you for being here.
Thank you.
It's been a joy. And thank you for coming back this week for Uncontested Investing. We'll be back next week with another new show. And just remember, your network is your net worth. And today you've been growing both. See you soon.
Thank you for listening to the Uncontested Investing Show. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time. The preceding program is furnished by RCN Capital, LLC. The information provided is for general education purposes only and does not constitute any legal, financial, investment, or other professional advice. The views, thoughts, and opinions expressed of any speaker are the speaker's own opinion and do not represent the views, thoughts, and opinions of RCN Capital, LLC. No information contained in this episode should be construed as financial, investment, or legal advice from RCN or any individual, author, host, or guest. You should always consult a financial advisor before investing.